Welcome to the Skilled MBA Finance Case Study Series. Today we examine AirAsia X, a long-haul low-cost carrier that faced unprecedented financial distress during the COVID-19 pandemic. With air travel coming to a near standstill, the airline found itself under immense financial pressure, burdened by unsustainable levels of debt. The leadership team was tasked with an immense challenge: to prevent collapse and ensure future viability. Their response involved strategic negotiations with creditors aimed at debt restructuring. This delicate process required aligning the competing interests of lessors, lenders, and investors, each holding a stake in the airline's survival. This case highlights the complexities of crisis management and stakeholder negotiation. It underscores how leadership decisions during turbulent times can reshape the financial future of an organization. AirAsia X faced a severe financial crisis due to COVID-19, grounding its fleet and freezing revenue streams. The company struggled with a massive liability gap of over 33.5 billion Malaysian ringgit and unpayable lease obligations, risking imminent collapse without significant intervention. By October 2021, AirAsia X faced a severe crisis. COVID-19 restrictions grounded its fleet, halting operations and freezing revenue streams. The airline grappled with a liability gap over 33.5 billion Malaysian ringgit and unpayable lease obligations, risking imminent collapse without urgent intervention. Before COVID-19, AirAsia X was a prominent long-haul, low-cost carrier in the Association of Southeast Asian Nations, linking Malaysia to key destinations like Australia and Japan. Its budget-friendly model relied on high load factors and operational efficiency. As part of AirAsia Group, AirAsia X played a crucial role in Malaysia's aviation ambitions, impacting the national economy significantly. AX faced zero operating income due to travel bans while fixed costs persisted. Aircraft lease obligations became unsustainable and creditor pressure intensified. To address this, Lim Kian On was appointed as the restructuring lead to steer the company through this financial crisis. AX's financial distress was immense, with 33.5 billion ringgit in liabilities. Key obligations included aircraft leases, bank loans, supplier credits, and airport fees. The asset devaluation exacerbated the crisis, necessitating urgent intervention to address the unsustainable debt burden and stabilize the company's financial position. Recognizing the unsustainable debt, a restructuring team led by Lim Kian On was formed. Initial discussions with major creditors aimed to gauge their positions and flexibility. A comprehensive restructuring plan was developed to meet stakeholders' minimum requirements, followed by securing formal approval from the necessary percentage of creditors to implement the plan. Lim faced the challenge of negotiating with creditors while liabilities exceeded assets by billions. Establishing trust was crucial, requiring a credible recovery plan. The focus was on designing a debt structure to ensure operational viability post-restructuring, while preventing creditors from opting for liquidation, which would eliminate any remaining value for stakeholders. Aircraft lessors faced potential payment losses but retained asset ownership with limited redeployment options. Bank lenders required debt servicing, aware that liquidation would yield minimal recovery. Trade creditors sought past payments, valuing AAX as a future customer. Shareholders faced dilution, hoping for upside in restructuring over total loss in liquidation. AirAsia X proposed a 99.5% debt reduction to ensure long-term sustainability, offering creditors an initial 0.5% recovery with potential future gains. A ringgit, Malaysia 200 juta capital injection, is essential to restart operations and support the restructured airline, aiming to balance creditor interests with the airline's survival. Creditors initially rejected the 99.5% debt reduction, deeming it too harsh. Disputes arose over AAX's asset valuation in the post-pandemic market. Some creditors sought legal avenues for preferential treatment. However, after negotiations, key creditors acknowledged that a restructured AAX provided better recovery potential than liquidation. Navigating Malaysia's Companies Act. Section 366 and international creditor jurisdictions posed significant legal challenges. Timing was critical as AAX raced against depleting cash reserves to position for post-pandemic recovery. Operational constraints included maintaining viable operations and retaining key staff despite severe cash limitations, highlighting the complexity of restructuring in a capital-intensive industry like aviation. In financial distress, extreme solutions are often necessary, as traditional restructuring may fall short. Effective creditor communication is crucial, particularly when proposing significant haircuts. The aviation industry's capital-intensive nature presents unique challenges, requiring tailored strategies. Leadership credibility is essential when financial resources are exhausted, ensuring trust and guiding successful turnaround efforts. In restructuring, fairness must be balanced with viability. Leaders should align creditor recovery expectations with business survival needs. Preserving intangible assets like roots and brand is crucial when physical assets devalue. Managing reputational risk is key to maintaining credibility for future financing in a relationship-driven industry. In the aviation industry, preserving intangible assets like roots and brand identity is crucial when physical assets devalue. Effective restructuring balances creditor recovery with business viability, ensuring future credibility. Skilled Master of Business Administration offers insights into these complex recoveries, emphasizing strategic decision-making and value preservation in crisis finance.